Hi, and welcome to the fourth episode of Rapid Rundown, your one-stop shop for last week's market-moving news. So story number one for today is how the $3 trillion shadow credit market spooked stock markets last week. What happened was that concerns over non-bank credits, so-called shadow credits, caused jitters in the stock market as it was disclosed that some borrowers had to default. And stock markets reacted with a decline in bank shares and a rush towards perceived safe havens like gold. And this highlights systemic risks from less regulated credit markets, which could cause contagion to traditional banks and funds. And topic number two for today is France's credit rating downgrade due to political instability. So Standard & Poor's, also called S&P, lowered France's sovereign credit rating from AA- to A+ due to political instability and slow reform execution. And the downgrade causes an increase in borrowing costs for the French government and could cause capital outflows from French bonds and banks. And of course, the signals investors increase concerns about structural risks even in developed markets. And the third topic for today is strong earnings for US financial corporations like banks and how those US banks are helping so-called China Inc. go global. Major US banks like Morgan Stanley and Bank of America reported robust earnings, boosting investor confidence. And Bank of America, for example, reported a 25% earnings increase in just one quarter. And semiconductor and tech companies like AMD and TSMC also reported strong demand, fueling market optimism. And simultaneously, US banks are profiting from underwriting Chinese companies on the Hong Kong Stock Exchange, highlighting how in modern day times finance and the economy and geopolitics often intersect. And of course, this raises the question whether there would be, for example, repercussions from the US government in any form. And the fourth and final topic of today is that the IMF warns of a disorderly global market correction potentially coming soon. The IMF flagged heightened risk of a so-called disorderly market correction happening globally due to overvalued assets, trade tensions, and high debt. And as I reported earlier in this video, non-bank financial firms and private credit givers are seen as potential amplifiers of market shocks. And this warning signals that investors may in the future be more cautious and signals the possibility of regulatory interventions. All right, and that was it for this week with the most important market moving news from last week. Thank you so much for watching. If you're a professional investor interested in robust trading, check out autotrailer.com. Of course, hit the subscribe button and the bell, smash the like button. This way I said it the other way around. Comment down below what you think are other important news from last week, and thank you so much for watching.